Good evening, everyone. I, C. Tanya Gupta, welcome you all in LVC of Chapter 3 Audit Planning, Strategy and Execution. So, every great journey begins with a map, and every successful audit begins with a plan. Without direction, even the most skilled auditor can lose their way amid numbers, systems, and expectations. Imagine you are a newly qualified chartered accountant who has just secured your first big audit assignment. The client is a fast growing fintech company that uses AI, big data, and even experimenting with blockchains. As you step into this audit, you quickly realize that it is not just about checking books of accounts. There are complex IT controls, regulatory frameworks, and industry specific risks you must understand before beginning. So, should you bring IT expert, or can you rely on the company's internal auditor who comes from a traditional banking background but lacks technical skills? How do you ensure confidentiality when outsiders get access to sensitive systems? So these questions highlights why planning is not a preliminary formality but the backbone of the entire audit. This chapter will guide us through the process of building an overall audit strategy, preparing a detailed audit plan and executing it effectively while keeping professional skepticism and ethical responsibilities at the center. So, students, every audit, whether it is a small or a large, begins with one essential step, that is planning. Just as an architect cannot construct a building without a blueprint, an auditor cannot achieve audit objectives without a well thought strategy and plan. So, audit planning provides a roadmap that ensures the engagement is conducted effectively, efficiently, addresses high risk area, and make effective use of resources. So this chapter will take us through how an auditor establishes the overall audit strategy, translate it into detailed audit plan, and finally executes the audit. Along the way, we will see how factors like knowledge of client's business, involvement of experts, reliance on internal auditors, and continuous updating of a plan plays a crucial role in achieving audit quality and compliance with standards on auditing. From the exam point of view, this chapter is really very important because questions on audit planning, overall strategy, audit plan, and executions are frequently asked in the exams. They may be in the form of direct question or in the form of case study based scenarios, MCQs. So this chapter covers the major portion of the standards. Almost 8 9 standards are covered in this chapter, which make the backbone of the auditing, and examiners regularly test students ability to apply them in practical situation. So this chapter will not only help you in securing good marks but also builds a strong conceptual base for advanced topics like risk assessment, internal control, group audits. So in short, if you are thorough from this chapter, you understand this chapter thoroughly, you will be well prepared for your exam. So without taking much time, I request Harsha sir to please begin this chapter, and please tell them the importance of this chapter, how important this chapter is from the point of view of examination as well as practical applicability.
Thank you, ma'am. Thank you. Yes. Hello, everyone. Welcome to today's session. As ma'am said, like we are going to cover a very critical topic today. That is audit planning, strategy, and execution. See, execution. Most of when we talk about audit, most of us talk about test of details, test of controls. But before that, the very important and the crucial part is the audit planning. If your planning is not proper, you cannot have a proper execution or proper reporting. So this is the first and the base step of the audit. You have to go correct in this step, otherwise the whole audit can go for a toss. Okay. When I talk about audit planning, audit strategy, we have already discussed some of this portion in our last session. We discussed something about audit, overall audit strategy and audit plan. So can anyone tell me what we discussed in our last session about the overall audit strategy and the plan? Anyone? What we discussed about the overall audit strategy and the plan? Okay, what is the difference between the overall audit strategy and plan? Can anyone tell me that? No? No one? Okay, not an issue. So what we will do is we will understand these terms, like what is the audit planning, what is the audit strategy, and what is, the difference between them. Okay, we will understand that. Very good, Geet. Yes. So audit strategy sets the scope, timing, and the direction, and the plan includes detailed, procedures that are required to be performed. Very good. Yes, Mega, very good. Audit plan is prepared on the basis of overall audit strategy. Yes. And yes, very good, Chitra. Audit strategy is bird's eye view, while plan is a detail. Okay. Absolutely correct. So when we talk about audit strategy, overall audit strategy, it's a big document, but it's a overall document. When I talk about a plan is a detailed document. Now we will understand one more thing. We will understand one more critical aspect of this whole process. We will understand planning. Yes, what is audit planning? But we will understand what is audit program also. Okay, first we will see what is audit plan, and then we will go and see what is overall, audit program like that we developed. Okay, how strategy, plan, and program are different. Okay, what are the similarities, what is required to be documented in an audit plan. Okay, we will go through that. We will understand each and every step in detail, okay. Now first we will start with our first and foremost part, that is an overall audit strategy, which is a bird's eye view. Okay, that we discussed in our last session also. Audit strategy, when I talk about, it's an overall picture that okay, this is something we are seeing from the top. It is from the top that what will be done in the audit. When we commence a audit at that particular point in time, we what is the first thing that you do when you commence audit? Let's say engagement letter is signed, okay, or is about to sign. Before signing the engagement letter, what you guys do? What you guys do when before signing the engagement letter? Anyone? Oh, okay, Geet. But something before that also. Before I accept the engagement, I do something.
The
Before,
preliminary engagement activities,
can you give some example of preliminary engagement activities?
like checking the independence, ethical requirements, or understanding of the entity, its environment.
Okay, understanding of the entity, its environment. Okay. Anything else?
Sir, we will check our CCTR, that is competence, capability, time, and resources, whether it is sufficient to perform that audit or not. And we will check the integrity of the client along with the compliance with the ethical requirement. All those things will be checked before accepting the audit.
Yes, absolutely. Very good. Client's acceptance, continuance, integrity of the client, capability, resource to complete, all these things you will check before accepting the engagement itself, before accepting the client. Very good, Mega. Yes. Very good, Lavanya. So we will understand all these things. Now, before we accept the engagement, we need to understand, are we having sufficient resource to process or to proceed ahead? Okay, that's the first and preliminary step that you will do when you will start the audit. That is the understanding the audit itself. Okay, then you do the preparation of the audit. When I talk about the subsequent step, that is the audit preparation, that is something you do once you accept the engagement. Now, at the before audit, you decided, okay, I do have the sufficient resources, fine. I do have time capability to perform the engagement, fine. Client has the integrity, fine. There is no independence issue, no threat to the fundamental principles, fine. Now, when I go to the second and subsequent step, which is a preparatory step, that is over there, I actually now document all these things so that I can create the overall audit strategy and can create an overall audit plan. Now the subsequent steps comes in documenting all these things. That's in audit preparation, we call. We document our requirements, that okay, what is the structure of the audit, what is the overall audit plan, who will do what. We before that we document the overall audit strategy, and on the basis of that we proceed forward. Okay. Now, what benefits do you think we can have if we do a proper planning? Can anyone tell me, just random, what I can think of the benefits that you can arrive by doing a proper planning? What you will achieve by doing a proper planning? If I say, planning is important, why? What do you will achieve? Very good, Geet. Yes, timely completion. Yes.
Timely completion, and also the quality of report will also be improved if we plan appropriately. That like we can decide to whom to assign on what projects. In this manner, it will help us to improve the quality of audit report.
Absolutely. Yes, very good. What else? What else do you think would create or will be a benefit for us if we do a proper planning? Can allocate resource efficiently. Very good, Lavanya. Planning will help to various steps, execution and control. Okay, yes. It saves a lot of time, makes clear the procedure to be conducted to complete the audit. Okay, yes. Time management can improve. Yes. Anyone else with respect to any other benefit you can think of? Any other benefit you can think of? Assess if a specialized expert need to be engaged. Yes, very good. Absolutely correct. Yes, absolutely correct. So whenever all these are the benefits of having a proper audit planning. Plus, one more thing is you pay attention to the critical areas. Yes or no? I'll go back to the planning part or audit plan that we had in last session that we discussed. I'll open that and we will discuss again, once again, for a brief moment. See, this was the plan, audit plan for a particular company that we discussed in the last session. What we had over here, okay, we had introduction, this part about the audit, we had the objectives, okay, we had the scope of audit, overview kind of, you can say, understanding the entity, we had critical area, we understood the entity with respect to these aspects. Again, this is the overview, this is not in detail. Okay, then we had the risk assessment, some critical areas, critical, so higher risk of material misstatement, and some of the key areas that I'm talking about, not all. Revenue recognition, inventory valuation, goodwill, foreign currency translation, all these things. These are the critical areas. The risk you can understand as of now from these areas. That will help us to focus on the particular area, high risk areas. From the day when we know which are the high risk areas. Then you have planned audit responses. In front of that, you have preliminary planned audit responses, because the detailed one I will show you. Okay. Then strategy, what is the overall strategy that you are going to have? Okay. Materiality, audit approach, reliance on the internal audit, use of specialist. Also ma'am was talking about whether you need an IT specialist. If the firm is using artificial intelligence, can you go and check and audit the artificial intelligence? So, AI, like how you can, involve various people or various team members for their respective areas. Again, audit team and resource, like engagement partner, who will be that, audit manager, audit seniors, IT specialist, valuation specialist, their responsibilities, name, plus sometimes we have their availability, whether they are available for the full period or not, audit timeline, when we are going to do planning, interim, year end, completion reporting, presentation, whether they are matching with the due dates or not, everything, communication plan. So again, budget, a lot of things are there. A lot of things are there when we create a plan. This is just a simple one. Now the question comes is, like, if you see each and every area, you need some information. You need some information so that you can also, fill up and, decide all these things. From where you will get this information? From where you will get this information? Anyone? From where you will get all this information that is here? Like, for example, I'm not in a practical scenario, when you are doing an audit on the ground, from where you will bring all this information? By discussing with the client and engagement team. Yes, very good. Very good, Geet. Past history. Yes. From client. Very good, Mega. Yes. Pretty simple. Okay. From client, past history, all those things. From there, we will, come with this information. Okay. So all these informations will be obtained from client by following some procedures. It's, we will be required to follow some procedures. Now in chapter number 3, basically we will understand what procedures we are required to follow, how we will follow those procedures, what procedures we are required to follow, and how the output or whatever information we will gather, how we will document that information. Okay, how we will document that information. Clear? Any doubt till now? Any doubt? Okay. One more thing. Can anyone tell me a difference between an audit plan and audit program? What is the difference between a audit plan and audit program? Anyone? What is the difference between audit plan and audit program?
Sir, audit plan is mainly like it covers the scope of work, like what we need to do. Let's suppose in case of audit, like we need to see revenue, expense, and in audit program we mention in a detailed manner, like revenue part will be covered by whom, and expense part will be covered by whom, like that manner. So audit program is mainly a very detailed document.
Okay. But why do we, okay, if it is a very detailed one, why can't we have just a detailed document? Why to have a summary document then? Audit plan includes entry of audit procedures, but program includes allocation, assigned scope, instruction, timeline. Okay. Planning is allocation of time and resource. Program is more into execution and performance. Okay. Program is detailed procedures and plan is required. Okay, fine, good. You guys are correct, very correct, that okay, program is much more detailed. But why do we need a program when, like, why do we need a plan when we have a program? Or why to create two separate documents? Why to create two separate documents? Very good, Neha. Yes, very good, Geet. To execute the plan, we need the program. Yes. To execute the plan, we need the audit program. Okay. I will show you a draft audit program, basically. A draft audit program, okay, how it looks like and what are the things of that particular program. Okay, this is again a illustrative document. It may have it contains more details, so I will continue this particular program document throughout the chapter number 3 and chapter number 4. We will evolve from start to end this particular document, so that you guys can understand that how gradually this document is prepared and what at the end is is the outcome of this particular program document. Okay, so on your screen as of now, I'll just zoom it a bit so that you guys can see. This is a example of the audit program. Okay, example. Why? I'll tell you. When I talk about a plan, okay, when I talk about audit plan, we saw it contains some of the areas with respect to high risk of material misstatement. When I talk about audit program, this is basically program. Okay, what it contains area, the risk that area carries. Yeah, risk was earlier also there. The level of the inherent risk. Then you have the control in front of that. What are the controls which are mapped? Okay, in front of this particular area, in this particular you can say process. Then you have a control classification. So what is the classification of these controls? Like for example, you have a control like segregation of duties, system generated sequential order numbers, management review of monthly controls. So then you have a control classification in front of that particular area. What are these controls? One is a preventive, second is a detective, third again detective. Okay, and then you have a what test you are going to perform for these controls. Okay, for example, over here, if I talk about, see, you will perform like for the control number 1, which is the segregation of duties between the sales order, shipping and invoicing. What you will do, you will inquire about the roles and responsibilities of the personnel to check who does what, how the segregation of duty is maintained. Okay, for control number 2, you will select a sample of invoice and verify the sequence, whether the sequence or whether the control is working properly. Third, inquire with the management about the review. So third was management review of monthly sales report. You will review how the management is performing the monthly sales report review. Okay, and I may assign a control risk to that. What is the control? What is the definition of control risk? Can anyone tell me quickly? Definition of control risk. Definition of control risk. Anyone?
Sir, control risk is like related to internal control. Suppose for the payment, there should be approval mechanism, like from senior manager, it should be approved. So these are a control mechanism. If it is not available, then there is a chances of risk of like fictitious payment and all. That's why control, internal control are placed.
Okay, but let's say for example, I have a column called control risk over here. What that means? Moderate. What it means over here? What is the meaning of this control risk moderate in front of these? I have a moderate one. Why? Here, like inherent risk is high, but here the control risk is moderate. Why? What this control risk moderate means? Anyone? Basic audit.
The material misstatement in the financial statement says moderate, not low or high.
Okay. Okay. Very good, Geet. Your very good answer. See, what is the control risk? The definition of control risk, if I talk about that, the control, like, when I say control risk is moderate, that there are moderate chances that the control might not meet its objective. It will fail either in preventing or detecting the misstatement or the purpose for which it is designed. Over here, the control is designed for here, like, for the segregation of duty. When I say moderate, that means there are chances, moderate chances, probabilities that the control might not be able to prevent the segregation of duties or might not be able to enforce the segregation of duties. That means control will fail to check if there is a segregation of duty. There are moderate chances for that. Yes or no? Control risk is something that control might not be able to achieve its objective. That is a risk that it denotes. That internal control will fail to detect or prevent the risk or the possibility of that particular risk of happening. Very good, Lavanya. Yes. So when I say control risk is moderate, that means there are moderate chances that the control might fail to achieve its objective. As a result, in that case, I may have a, inherent risk is high, control risk is high. What is the audit risk? The definition or the formula of audit risk is? Remember,
inherent risk into control risk into detection risk.
Absolutely, yes. Yes, very good. Okay, so we call it risk of material misstatement. Now here, if, let's say, for example, if the control and inherent risk is high, at that point in time, usually we give high as an audit risk over here. Okay, that is the risk category I'm assigning to a particular process, revenue recognition. And then I will decide what test of detail I have to do to achieve or to meet that high risk area. Are you understanding? So when I prepare an audit program, this is still at some what I can say, some consolidated level. But when I prepare this program in detail, what actually I do, I map the control risk, I map the testing in front of each control. So for example, I'll show you one more. So usually what I do when I prepare is I take up each control, I map it in front of each control, what testing I'm doing, and each control is then assigned a particular risk. And accordingly, I may decide that what I need to do to test in that particular area. Okay, so when I prepare a program, it's very, very detailed, very, very detailed. I have just taken a revenue recognition over there, but revenue recognition, let's say a particular company is there. It can have a multiple type of revenues. So for the multiple type of revenues, I will have a different kind of revenue recognitions over here. For example, revenue recognition, then it will be, let's say it's a manufacturing entity, has a 3 different products, ABC. Revenue recognition for product A, revenue recognition for product B, revenue recognition for the sale of product C. Then again, at times I may have a depot to depot transfer, warehouse to warehouse transfer. How it is impacting, a lot of things are there. So process by process, I will list down all the things, the risk in each process. There could be multiple risk in a single process. I will list down that. For example, here the revenue recorded for the sale did not occur This is one risk. I could have a different risk also. This one, like for shipment, wait, or I can have a different kind of risk over here, which is applicable to that process. Not necessary that a particular process will have one single risk. It can have multiple risks. Okay. For example, here revenue is recorded for sales that did not occur. I can have a risk that revenue recorded is inaccurate and inappropriate. That means that revenue which I'm recording, okay, it has occurred. It is to the existing customers, but it is inaccurate or inappropriate. So it may have a different controls in front of that. It may have a different risk in front of that. For example, a company which is in the very complex, project related company. For that, this risk will be high, that revenue recorded is inaccurate and inappropriate, rather than the revenue is recorded or sales is done for the non-occurrence for the shipments which are there, like where the shipments have not been sold or where the shipments have not been sent. Very less chance when the companies are into the construction project. So if I say company is a real estate company, very less chance that they are recording fictitious sales, but very high chance that the sales which are recorded are not appropriately calculated. Valuations might not be correct of the properties which are sold. It may happen that revenue recorded is inaccurate. So one of the risk with respect to the revenue recognition will be low. Other might be high. Accordingly, there will be some, controls in front of that. There will be some classification of controls, risk assigned to those controls, and the testing accordingly. So when I talk about a program, it is much more detailed, much more. It contains everything. Here, there are few more things that are not documented, but usually that is there in the program. For example, have you heard the term walkthrough? Can anyone tell me what is walkthrough? What is process walkthrough means? Can anyone, do you have, heard this term before, process walkthrough? Anyone? What is process walkthrough? Yes, Geet, very good. What is a process walkthrough? Anyone? Understanding of the work, yes, very good. Guide, yes, kind of, very good, Chitra. Gaining deeper understanding of a process, yes. Getting to know each and every item, kind of, yes. When I talk about process walkthrough, okay, walkthrough means you walk the process. What you do is step by step, you understand what is done in that particular process. What is there in that particular process, you understand by taking one particular sample. That is we usually do. If I talk about industry standard, that is we usually do in this particular process understanding. That is kind of process understanding, nothing else. Okay, we take one sample, we understand the entire process, then what is there in that particular process, how that process is being followed. Okay, for example, revenue recognition. Okay, then I will understand what is the revenue recognition process. Let's say I have a one process walkthrough. I'm doing a process walkthrough of a revenue recognition. What I will do is I will identify who is the person. I will go to that person. Okay, tell me, how do you recognize the revenue? What are the things you recognize when you are doing a, what are the things you check when you basically, perform the revenue recognition activity. He will tell me, okay, I do first this, I do second this, I do third this, a lot of things he will tell me that these are the things he will do. Based on that, I actually prepare a process flow chart. Okay, based on that process flow chart, I then decide what are the risky areas in that particular process and what are the risks. So first I do a process walkthrough, then I decide the risk by understanding the process. Remember, at multiple places we have discussed, like, okay, inquiring the management, inquiring the relevant personals. This is how the inquiry is done, by process walkthrough. When you do a process walkthrough, you are inquiring with the management. Okay, management, tell me how you do this particular activity. And at a lot of times, what you do, you take one sample, you ask them, okay, this is one sample of the revenue recognition. Now tell me, how do you perform the revenue recognition process from start to end? Which systems are involved? Everything. Which standard is basically there with respect to understanding of the business and understanding of the entity?
SA315. SA315.
SA315. Yes, absolutely correct. SA315. I will show you a document, okay, of process walkthrough. That, again, this is an example document of process walkthrough, wherein, like a construction company's process walkthrough has been documented, how the process walkthrough actually is being performed for a revenue recognition process. Okay, by this way we can understand what process walkthrough is. Kind of, you can understand the inquiry and how then it is incorporated in the audit program and the plan, just for your understanding. Just let me share. Okay, I'll zoom in a bit. Okay, see, this is the process walkthrough, revenue recognition, percentage of completion for the construction company, Keystone Construction Corp. Okay, you have a date when it is done, you have a process, contract revenue, cost, process recognition, auditor's name. These are examples. Okay, then, as I said, you select a particular transaction, which is the transaction which is selected, project, which is that particular project, client, period, a lot of things, of that particular sample, you document it. Then you see, like, who is the person interviewed. Remember, inquiry, you have to do inquiry. Like, for inquiry you need a person, you cannot do inquiry alone. Who are the persons involved? Contract administrator, project managers, controllers, account receivable specialists, and then they provide you step-by-step understanding. Here, if you see, you document, okay, I began speaking with her, okay, and I asked the following questions. She provided this explanation. Inspection, you inspected this document, you observed these things. So inspection, observation, inquiry, all these things are there when you document the process walkthrough. Then first, step one, contract initiation and system setup. Second, accumulation of project cost. Step by step, you understand what is there in the process. You do inspection of the documents, you observe how they are doing, what they are doing, who is accessing which particular IT system, who is doing what in that particular IT system. You document all these things. And from this particular document only, now the second step will come of the audit program. That is, you will identify the key risk areas. For example, I will show that, see, this is measuring progress and calculating revenue, step number 3. So what they provide you, that, okay, At the end of each month, he is responsible for updating estimates at the completion for his project. This involves reviewing the actual cost and all these things, everything. Okay. Now the process is that after project manager over here submits and updates EAC, he runs a monthly revenue recognition calculation in the system. The one of the risk can appear is, what if he this particular part, what if he updates incorrectly? He is responsible for updating estimated at the completion. What he updates incorrectly? Who is going to look into that? Because based on this, your revenue recognition is dependent upon your formula. Consider this estimated total cost. Okay. And if someone updates this wrong, your revenue will be wrong. In a percentage of completion method, if you provide a wrong, total cost, your percentage of completion will be incorrect. So who is monitoring this? Who is, checking whether the particular cost which is updated is correct or not? So you, by doing a walkthrough, identify the risk. There is a risk. Now, again, it's a revenue recognition area. What we have learned about the revenue recognition? Quickly, in one of the standard, we learned something about revenue recognition. What was that? What was that? That in one of the standard, we discussed about something about revenue recognition as an area. What we discussed? Anyone? No? High risk area? Yes, very good, Lavanya. Very good, Geet. Yes. Fraud risk? We discussed that there are high chances of fraud in this particular area. Presumed risk of fraud, yes or no? In SA 240, we discussed that revenue recognition will have a presumed risk of fraud, and accordingly, it will be a significant or high risk area. Now, here I identified a risk. This is direct impacting my revenue recognition. What I will do? I will say this is a high risk area. I will go to my audit plan. Okay. What I will do is I will go to my audit plan, and in my audit plan, I basically will update this particular area. For example, project progress assessment, this one, and revenue calculation. I'll remove the rest of the things. In walkthrough, I updated this. I made this a high risk area, and then the rest of the process that we discussed. So by reading just the process itself, or by performing the process walkthrough, we are able to understand which are the high risk areas. By performing the process walkthrough, by understanding the entity, you are able to identify the high risk areas, the risk in the process. Now, there could be a control in front of this process. There could be a control. But again, for that, you need to perform a process walkthrough, that someone is actually verifying before this person puts into the system. So here he is a process manager, PM. But let's say, for example, controller says that no, I verify each and every process manager's estimation at completion for their projects when they put into the system. They are the preparer, I am the reviewer. Once I review, then only it goes. That is a control. Now there was a risk, you got a control in front of that. Now you will see what is the chances that the control may not achieve its desired objectives. That is a control risk. Inherent risk, we decided it's a fraud risk of fraud in the revenue recognition. It's an inherent risk, higher one. Then we will go to the control risk. What are the chances of this control not meeting the objective? Now that is usually done based on your experience, that past experience, your if anyone has has performed these kind of audits or in this industry. So that plays an important role when you decide this particular risk, those experience and the knowledge. Once you decide a control risk, you say that, okay, this is a high control risk, high inherent risk. I need to test more samples for the test of controls to get more evidence. Yes or no? So once you will decide that this is a high risk area with respect to the control, you say, okay, now I need to test more samples. So control testing size will come. You will test high samples for this particular area. You will test high samples because the control risk is moderate, inherent risk is high. I need more audit evidence from the test of controls. Then you will document the outcome. What is the outcome in this? Means after testing the control, can you rely upon the control? Whether the control passed, failed, what happened with that control? Let's say I say failed, control failed, and this control passed. Okay, this failed, this passed. So what will happen is control outcome or TOC outcome will be this. Now this failed. That means control is not able to achieve its desired objective. I will go back and I will have a revised control risk. And that will become high. Revised control risk. Why? Because after the outcome, this was before testing. Pre-control risk, you can say, pre-testing control risk. This is revised one after it is now high control risk, high inherent risk becomes high audit risk. The audit evidence that I need will be again high. I need to do more testing. I need to do more TOD to get more evidence over here. This is the whole audit program. In this, we document a lot of things. Not only the controls, all this, we document which systems are involved. We document who are the process owners. We document who has done the process walkthrough. We document who is going to do the control testing. There could be 10 different people involved. Different person at the control testing. Different person at the TOD, test of details. Or there could be 3 people assigned for the TOD. There could be 2 people assigned for the TOC. All these things are, again documented in these programs. Now, this program can only be prepared when you have understanding of plan. If you have understanding of audit plan, then only you can prepare a program. So basically, when you have an understanding of this plan at the start, what are the critical areas, what are the risk in those critical areas, what is the materiality, time limit, everything, then only can prepare the program. Yes or no? Are you clear? Any doubts on any of the part that we discussed now? Okay, let's go to the study material. We will now, whatever we have discussed, we will go through that particular from the study material itself. Okay, and we will correlate with what we have discussed and what is there. You will find, the same things because, it's a logical. Okay. So, yeah. So chapter number 3. Okay, we will discuss about the audit strategy, audit planning over here. Okay. Now, again, when we started the discussion, I specifically asked you what you will do before signing the engagement letter. That is the audit planning kind of, you get an audit request, audit agreement date. You audit, you assign an auditor by going through, okay, whether the particular audit can be taken or not. That's a part of, audit planning. Then you do the audit preparation, where you have the plan, program, you modify the program, all these things. So requirement is sent, you perform the walkthrough to prepare the program. It's not something that you first prepare the program and then do all these things. No. Understand one thing: when and what document is prepared. When I start the audit, at that point in time, I only have a overall audit strategy, because I do have a very less detail in my hand. I don't have much detail in my hand when I start the audit. So I have overall audit strategy, which may contain lesser detail, very lesser detail compared to the plan. It's very overview kind of. Then I perform some procedures, some inquiries, preliminary inquiry. I meet people. Okay, a lot. I do up some procedures. And when I do those procedures, I'm able to prepare a plan. Once I prepare a plan, based on the plan, I go forward. I assign person area wise and I ask them go and perform the walkthroughs. And the moment they will perform the walkthroughs, they will start documenting in the program. And more, as and when more information will come, we will update the program. We will prepare the program. Now the question comes is this particular, if I go back to the audit program, this TOC outcome, when you will be able to identify this TOC outcome? At what stage of audit? At what stage of audit you will be able to identify this TOC outcome? During audit, okay. Execution, okay. After execution of the audit plan, yes, absolutely correct. So this TOC outcome will be identified after execution. Once I do the execution, I will be able to understand. Okay, that is clear. But the planning is done before execution. Audit program is part of planning. How I am updating it after execution? How I am updating it after execution? You will say, sir, this is wrong. You are doing planning related thing after execution. Why? Very good, Geet. Understand my question or the dilemma over here. I am saying audit program is a planning related activity, but I am filling up that particular program after execution, not during the planning. Very good, Lavanya. So when I say, you might have heard or you might have read this particular term multiple times, planning is a continuous process. Okay, planning is a continuous process. When we hear this term, at that point in time, we just read. This is what it means, that it's a continuous process. You never stop planning. Trust me, even after all the execution, you go back to the plan, you see whether anything further needs to be revised. Whether do I have sufficient and appropriate audit evidence to comment and to provide the opinion? And if you are satisfied, yes, I do have now sufficient and appropriate audit evidence. At that particular point, at the time of issuance of the report, your planning will close. That's why we say planning is basically a continuous particular process. Okay, so if you see point number 1.3, it specifically says planning a continuous process. It's not a one-time thing that you do. It's a continual and iterative process. The moment you do something, you get a result, you incorporate that result in the planning, and again you go and check whether it is appropriate or not. That's what it means with the continuous process. Now, once I have the outcome of, let's say, test of controls, I will enter into my program. I will see what test of details I'm required to do. And planning gets completed till the time you complete the current audit engagement, means you issue the report. Till the time I don't issue the report, planning is still open. It is still going on. Clear? Why we say planning is a continuous process? Okay. We understood planning being a continuous process. Then overall audit strategy and audit plan, both are the responsibility of the auditor. We understood what is the overall audit strategy and the plan. What is the difference between them? You do perform client acceptance and continuance. We discussed, like, before, accepting the engagement, before signing the audit, audit engagement letter, before signing the engagement letter or accepting the audit, you perform A&C procedures. We have already discussed this at the time of SA 220. Also, with respect to SQC1, the firm should have policies and procedures for client acceptance and continuance. Yes or no? In SQC1, we saw the firm should have policies and procedures. Same we saw with respect to the engagement in SA 220 about the client acceptance and continuance. Okay. Then we will come to the content of an audit plan. What audit plan should contain? What are the things that audit plan should have? Audit plan should have nature, timing, and extent of the planned risk assessment procedures, nature, timing, and extent of planned further audit procedures, other planned audit procedures. Okay. So audit plan is more detailed than overall strategy, because strategy is something you prepare when you have a very limited set of information. But plan you prepare after having certain set of information. That's why the plan over here also, plan is much more detailed. If you see, you have a risk, you have a nature of risk, you have a planned audit response. Plus, when I say nature, timing, and extent, that means this nature of the risk, timing you already have over here, like what and when it will be performed, and extent, that how much you will do, what testing you will do. So basically, audit approach, this is the extent I'm talking about. So you can say this is the extent, this is the timing part, and this is the particular nature of the risk involved. Nature, timing, and extent that we are talking about. So these are the things that you should have in an audit plan. We understood with a very good example, which is there. Okay. Then changes to the planning decision. Okay. Do you change the planning decision? The answer is yes. We change the planning decisions. Why? Because of the evidence obtained from the results of the audit procedures. For example, here you have TOC outcome. Remember TOC outcome column that we had in that particular program. Based on that, I said, no, it's a higher risk. Let's go back to that example and understand once more. Now, when I talk about change in the planning decision, let's say earlier, based on my understanding, I said, no, this risk, the risk assigned to this control should be low. Means the control will operate appropriately. I don't have any doubt in that. So I tested less samples. Now, in testing of less samples, control failed. So the revised risk of control became high. So see, I will have one more column, pre, audit risk, revised audit risk. Okay. So in case of pre-audit risk, because the control risk was low, because of the inherent risk was high, and the combination of low, I said no, pre-audit risk is moderate because I have a good control. Although the risk is high, but I have a good control. So I have a moderate risk, audit risk. And accordingly, moderate audit risk will have a moderate test of details. But the moment it failed, the revised audit risk increased, it jumped. Now, earlier, let's say, for example, pre-audit sample size, like pre-audit or TOD sample size. So earlier, the sample size that was there, let's say I decided to test 50 samples. Hypothetical example as of now. Okay. I decided to test 50 samples of invoices. But when the control failed, it jumped from moderate to high. Now, revised sample size, TOD sample size may jump to 100 because I need to gather more audit evidence in front of the high risk. Okay. So as a result, these pre things are, will change to the post one, revised one, because you have some more information now. You have now some more information based on which you say that, okay, no, I need to do something different. I need to go something different way than what I was going before. Similarly, that is there in your study material, that is changes to the planning decision, pre and revised part. The auditor may need to modify overall audit strategy and the plan due to the below mentioned factors. Results of unexpected events. For example, you identify the fraud, changes in conditions, or the evidence obtained from the audit procedures. Based on that, you may decide to alter your planning decisions. Clear? Any doubt? Any doubt till now? Okay. Then we have the overall audit strategy explained. Again, we have discussed that it determines, the overall level of scope, timing, and direction of the audit. It has very less detail compared to the plan because it's a strategy, nothing much. Okay. So you decide what is the characteristics of audit, what are the reporting objectives, team efforts, result of preliminary engaged activities, and nature, timing, actions of resource. But I'm not talking about any areas over here. If you remove the areas, so you will get the overall audit strategy. But the moment you include some of the risk assessment areas, you will get overall audit plan. Okay. So audit plan will have some more details compared to overall audit strategy. Clear? Okay. Then benefits we have already discussed. Consideration in establishing overall audit strategy. Okay. That is characteristics of engagement. That's a financial reporting framework. For example, in our, I'll go to the plan to explain you this. When we were deciding the plan, some of the portions of the plan are also from the strategy itself. That means when we decide the strategy, we decide what is the fiscal year end, what is the prime objective, okay, in accordance with which financial reporting framework. Here, the IFRS that I'm talking about is nothing but your financial reporting framework. This is an example, basically. So this is your financial reporting framework that we decide in the overall audit strategy. Okay, then industry specific reporting requirements, if there are any. Then expected audit coverage, number of locations, if you have multiple location wise. nature of controls or relationship between a parent or entity, its component. For example, over here, we discussed like, okay, this is the plan for Innovate Incorporation. Now, if there is a subsidiary, then we will write, okay, this is the subsidiary, how we need to proceed forward. What are the person who are involved in this particular audit? Do we need to report to a group level audit or principal audit? To the extent which components are audited, we will see these 2 points basically when we will discuss SA 600. Okay, in detail. Use of service organization. Which SA it is? We have discussed use of service organization.
SA 402.
SA 402. Very good. We will understand whether they are using the service organization or not. Expected use of audit evidence obtained from previous audit. So remember, we discussed about all the pre's, that pre-audit risk, pre-control risk. So you basically use that evidence to determine the pre-level. Then you go for the post-level, revised level. Effect of information technology. If someone is using the IT involvement, availability of the client personnel and data. So I will tell you one specific part with respect to the IT in our example. So this is the process walkthrough. Okay. Now, see, this process walkthrough has something with respect to the IT. I'll tell you. So here what is the thing is, once the process manager submits the updated cost, the controller runs monthly revenue recognition calculation in the system. So he's doing something in the system. The system uses the cost to cost method to calculate the percentage of completion. Now here one could ask that if the system is running, how can you say that system is running appropriately? This is a formula, perfectly fine, not an issue. But my question goes like, how system runs this appropriately every time? What if, who checked whether the system is using same formula? It's a system. Have you gone inside the system and see like, oh, what is the formula which is being used? How can you say that the system is using the same formula each and every time? This becomes a system risk for me. Okay, my question to you guys. You identified this system risk. What you will do? You identified this system risk. What you will do now? How you will tackle this system risk? Anyone? I don't want the something which is written in the book. I want your answer on ground. What you will do? You identified this is a system risk. That how you will ensure that system is running correct formula? What you will do to ensure that? Apply logic, you will get the answer. Anyone? No? Okay, Mega, very good. So you will appoint an IT personnel. Yes. What else? What else you guys will do? Anyone? Quickly. No? Okay. There are 2 things I will do. Number 1, I will appoint a IT person to validate this formula. So what he will do is he will validate this formula in system. I have written on Word. Let's see, this is something I have written on piece of paper, but the system is understanding the same formula in same way in coding. So because the system will have codes, it is either written in Python, JavaScript, or whatever language it is. So whether this formula is appropriately written in that particular coding language or not. So the IT guy will come and say that, okay, the code is properly fine. So he will validate the code for me. Okay. He will validate the code for me. Great. Code is validated. Fine. But there it does not stop. Code is fine. Whether the code is running appropriately every time or not, that is the second step I need to check. So what I will do is I will use a testing, specific testing, which is known as a IO testing. Okay, IO testing. That is an input-output testing. What I do is I give him an input, a designed input for which I know what should be the output. That is, I will give him an estimation at completion, some number, and I will have a manual calculation ready. If I'm giving this number, this should be the output by the system. And then that particular system, once I will give him the input, he will give me the output. I will validate that output and I will see whether the output that is given by the system is exactly the same that I was expecting or not, based on the manual calculation. If that is fine, the code is fine, system running fine, and not an issue. The system is good to go. But now for this, you need an IT person. Again, there are complications involved, that you cannot enter random data in your systems, in IT systems which are there by the company. You need to create I'll give you a term for your research, sandbox environment. Okay, so this is their sandbox ENV. Your homework is go and check what is sandbox ENV. Sandbox environment. So we create a sandbox environment where we check this stuff. Okay, let's go back to the study material. So I will, see the effect of information technology on the audit procedures. See, having a system decided that I have to involve IT guy and IO testing. So by having just a system in the process, two things got involved, IT guy and the IO testing. So this is how the effect of information technology on the audit procedures. That means availability of the client personnel and the data. All these things are there which are required to be considered in the overall audit strategy. That is just one part of the characteristics of the engagement. Then you have reporting objectives, entities, timetable of reporting. Same way we have here. What is the timetable of reporting? Okay, like when they need final report, discussion with the managements, everything. So what is the entity's timetable of reporting? Organizational meetings with management regarding audit work, decision regarding management, type of timing of reports to be issued. For example, over here in communication part, we discuss weekly meetings, formal communications, final presentations, how we will do, with whom we will do. Okay, again, this is part of the strategy also and the plan also, because in strategy we decide at the overall level and then we implement the same in the plan. So communication with the auditors of component. Now, when I'm talking about component, okay, this particular part is something we will discuss in SA 600. And again, the communications, various communications that you will do. Then significant factors with respect to preliminary engagement activities, knowledge gain on the other engagements. So you will apply those factors. For example, materiality. In our plan or in our strategy, basically, we decide the materiality. Remember in last session, we discussed about the determination of benchmark. Do you guys remember that? We discussed in detail about the determination of the benchmark, materiality benchmark, with an example also. Yes or no? Anyone? What we discussed in the last session about determination of the benchmark. Can anyone quickly provide me a summary of that? What we discussed. Let's see how much you guys were paying attention to that particular part. Come on, quickly. What was the thing that we discussed about the determination of the benchmark? Okay, tell me, what is materiality benchmark? Question to you guys, what is materiality benchmark? Quickly, what is materiality benchmark means? So we discussed about in the last session about the benchmark. So my question is about materiality benchmark.
So to determine the level above which we will do the testing. For example, 5%, we will set 5% of the revenue, and we will do the testing above that amount only, not below that amount.
That you are talking about either performance materiality or overall materiality. I'm asking materiality benchmark. Very good, Geet. Yes. So materiality benchmark, when I talk about, these are the factors on which you will calculate the materiality. For example, sales. For example, EBIT. For example, EBITDA, right? TDA. That is interest before earnings before interest, tax, depreciation, amortization. Okay. Then you have, sometimes you may have fixed assets. If it is a capex, heavy capex industry in startup, you may have a fixed asset. Some other benchmark also. Let's say, for example, it's a cost plus entity. Okay. I'm not sure you guys are aware about cost plus entities. That means these are the entities which bill based on the cost they incur. Let's say I incurred the cost of rupees 1 lakh in a month. So I will bill the company 1 lakh plus 15% margin. So for me, margin is fixed. I bill according to the cost. For them, the benchmark could be your total expense. Because your margin is a fixed percentage over on the total expense. So for cost plus entities, you generally take a total expense as a benchmark, materiality benchmark. So for different kind of entities, I may take a different kind of benchmark depending upon the nature of the entity. Okay. And that you decide at the time of strategy itself. Based on your experience, based on your knowledge. Okay, that you determine. Preliminary identification of the areas where there may be higher risk of material misstatement. This one. Preliminary identification of areas. This is the preliminary identification of the areas. Risk assessment, this one is a preliminary identification. Then impact of the assessed risk of material misstatement at overall financial statement level. Same, that part we discussed. Manner in which team members need to be maintained in questioning mind or professional skepticism. Results of previous audits, discussions, all these things, volumes of transaction, importance of internal controls. These are certain things that you document in your audit plan or overall strategy. Now, this is something which is done based on the information available and then the nature, timing of extent. Similarly, what you do is you then prepare an audit plan, which contains overall audit strategy that we decided now. Okay. And some key decisions that you take after the strategy based on the data available. Okay. with respect to the nature, timing, and extent of risk assessment procedures, record for changes in the overall audit strategy. Okay. So key things that you bring after the strategy in the plan. We have discussed what is the strategy and what is the plan. What is the relation between both of them? That you need a plan from the strategy and you need a program to implement the plan. We discussed with respect to the audit program, formulating an audit program. Now, again, audit program is a very detailed document as we discussed. It is not of one set of thing, but it is a very detailed document. It may contain multiple files, multiple things. It's not a single particular document itself. Okay. You decide the nature of business, in which organization is engaged, overall plan, system of internal controls. Remember the internal controls we saw, accounting procedures, walkthrough. We did the walkthrough of the procedures. Okay. Size of organization, information in the business, all those things we discussed. Drawing up a program. Again, when you decide to draw a program, you need to think of like what are the things I need to include a program. Everything. Basically, you include everything that you know. You include everything that you are going to do in a program, because you execute a program on the ground. Once you have a program, you go and execute that, and you amend the program from time to time as you get the information. But based on your experience, important changes that you have identified, or evaluation of the internal control, you change or you modify the program accordingly. You modify the program on these three accounts. Remember the revised part, evaluation of the internal control made for the current year, revised part. You made change based on after understanding, like, okay, now I cannot rely on the control failed. So these are some examples of circumstances. Okay. See, where during the course of an audit, it has been discovered that the internal control procedures were not effective as assumed at the time of audit program was framed. Simply, the example that we discussed. Pre, you can say control risk versus revised control risk. That is the example that we discussed. Okay. Any doubt that we discussed? Yes, no. No? Okay. If no doubts, let's quickly take a 10 minutes break. After the break, we'll go for execution. Now, very important. We will see how, once we have a program, then how we do the execution, and we will see some specific portions of the execution now. Not the detailed execution that we do in SA 330 or SA 315, but we will see some specific portions of the execution. Okay, that we will now see again, which is related to the planning also with respect to the that specific area. Okay, so after the break, we will take those areas. Yes. the basic part of the plan, program, and you can say audit overall strategy. Okay. Once you do a good planning, you can go for execution, which includes risk and control evaluation, testing, reporting, all those stuff. Now, there are some important aspects that are related to the plan or program. Basically, they are also related to the execution. That means some critical areas, some important areas that we need to discuss upon program. These are the special considerations, you can say, okay, which are relevant with when it comes to the overall audit, planning, execution, reporting, everything. Okay. Now, one such area is using the work of another auditor. Okay, that is your SA 600. We will discuss about SA 600, that is using the work of another auditor. Before I go and discuss in detail why using the work of another auditor and this standard, let's understand first what is the term another auditor mean. Okay, so we have to understand this term another auditor. Can anyone tell me what do you mean by this another auditor over here? Anyone? What do you mean by this another auditor? Can anyone tell me what do you mean by this another auditor? Can I include a joint auditor in this another auditor? Can I include joint auditor in this another? Okay, Neha, good. Okay, Megha, good. Okay. Okay. So some of you have already said yes to it. Some of you have already said no to it. Remember one thing, when we are talking about another auditor, it is not the joint auditor.
Recording in progress.
Auditor whose work is used to issue opinion on financial statement. But the main point over here is this particular auditor. Now here, instead of another auditor, I will say other auditor. Okay, this other auditor, he himself, does not issue opinion on this FS. So he does the work, or he performs the work, but he never issues opinion on this FS. Rather, his work, which may be opinion on other FS. So this work can be opinion on another FS. Okay, can be used. This opinion on another FS can be used to issue opinion on some other FS. Simple example, this another FS I will call as a subsidiary. So opinion issued on the subsidiaries FS can be used to issue opinion on this parent company's consolidated FS. Okay, so if I issue an opinion on parent company's consolidated FS by using a work of another auditor who, or when I talk about the work, is an opinion issued on subsidiaries FS. If I use that work, that will become the other auditor whose work is used to issue opinion on one particular FS. Okay, so that is not the joint auditor. Joint auditor will not fall under this particular arrangement because joint auditor itself issues an opinion on the parent company's FS. Clear? So we understood the another auditor term. Now we need to understand the term work. We are using the work of another auditor. Now what this work includes? Basically, when I talk about this work, okay, this work will include, you can say, opinion issued, testing performed, okay, or specific procedures. So this work can be opinion issued, testing performed, or specific procedures performed by this another auditor, which can include a lot of things. So when another auditor or other auditor, we will use the term other auditor instead of another auditor. Okay, but like both terms are used interchangeably, other auditor or another auditor. If the other auditor performs some work which is testing, performs specific procedures, opinions, which we can use for the purpose of our opinion, over there I will use this standard SA 600. Here we will see what are the things that we are required to do before, okay, using this particular or relying on this particular work. We will see how we can rely upon the work performed by another auditor. What are the responsibilities of the first auditor, and accordingly. See here, we are saying using the work of another auditor, but someone is using this work. Okay, so other auditor is performing the work for some, let's say for me, using the work of another auditor. But who is using? The statutory auditor is using the work of another auditor. So here, the statutory auditor will be termed as principal auditor. The statutory auditor will be termed as principal auditor. Okay. Principal auditor, that is the auditor who is using the work of other auditor. So he is the one who is using the work of other auditor. So these are certain terms that we need to understand. Okay. That means principal auditor uses the work of another auditor to issue opinion on the particular parent company's consolidated financial statement, or you can say principal financial statement, or any specific given financial statement. Okay. Now here, instead of subsidiary, like in our example, we use the subsidiary. Okay. But here we will use another term. We will replace the term subsidiary with component. Because subsidiary means a subsidiary, like company, subsidiary of a parent company. But component will include a division, branch, subsidiary, joint venture, other entities whose financial information is included in the parent company's financial information. Okay, so this is the component, or instead of parent company over here, we will use this, or we will call this as an entity. This is nothing but your entity. Entities FS. Whenever we say entities FS, that means parent company's FS. And whenever we say component, you can understand it's a subsidiary. Whenever I say other auditor, you can say auditor of the subsidiary or the component. Other auditor is nothing but auditor of subsidiary or component. Okay, so these are certain terms that we need to understand first, and then we will deep dive in this particular standard. Clear? Any doubt with any of the terms that we discussed over here? Okay. Now, if no doubt, then we will proceed and understand what are the things that usually a principal auditor, see, here we will discuss from the point of view of principal auditor. So we will understand what a principal auditor is required to do before using the work of a other auditor. As of now, see, the principal auditor uses the work of another auditor, that the principal auditor should determine how the work of other auditor will affect. So basically, here it's the principal auditor who will use the work of other auditor. We understood who is the principal auditor. We understood the other auditor term. We understood the component. All the three terms have been understood. Now, the first thing we need to understand, can anyone become a principal auditor? I'll give you an example. I'll explain with an example. So there are entities. Let's say ABC Limited, DEF Limited, ABC Holding, okay, which has again A Limited, B Limited, and then their parent company is like XYZ Holding. This is a structure. So XYZ Holding has a holding in ABC Limited, DEF Limited, and ABC Holding. And ABC Holding holds A Limited and B Limited. Okay. Now, this particular structure, let's say XYZ, I'm writing the now auditors of each company. Let's say Mr. K is the auditor, Miss J, Miss I, you can say Mr. L, and Mr. M. These are the auditors. For ABC, let's say Mr. O. So these are the auditors of the company. I'm not going into the name of the firm. Okay, just you have the auditor, the engagement partner over here. My first question, who is the principal auditor? Who is the principal auditor? In this whole arrangement, who is the principal auditor?
Is it Mr. K?
Okay. Can be. Most of you have answered Mr. K. Okay. Most of you have answered Mr. K. Based on the understanding that we obtained, or based on the understanding that we have, the term principal auditor means with the responsibility for reporting on the financial information of the entity. If you see, definition is here, here only. Okay. Reporting on the financial information of an entity, then the financial information includes the financial information of one or more components audited by another auditor. So if I talk about here ABC Holding, Mr. O can become principal auditor because it is using the work of L&M, and Mr. K can become a principal auditor because he is using the work of J, I, and O. There are two principal auditors in this particular scenario because they are using the financial information, okay, of one or more components audited by another auditor. So they are using the financial information which is of one or more components which is audited by another auditor. By this definition, we have two principal auditors. But standard says that by way of this arrangement, don't just act as a principal auditor. Means, okay, fine. This arrangement says there are two principal auditors. But just based on the arrangement, don't go and be a principal auditor. Standard says, based on arrangement, do not accept position of principal auditor. That means if you are just for the purpose of this arrangement, if you are the auditor of the parent entity, do not accept the position of principal auditor. Do not call yourself the principal auditor just because you are the auditor of parent entity. So based on the arrangement, do not call yourself or accept the position of principal auditor. Rather than the arrangement, go and check certain conditions. There are 4 conditions that before accepting oneself as a principal auditor, you should consider. And why it is so? Tell me. Why this condition or why this requirement is there? Can anyone tell me a logic behind it? Can anyone explain me a logic behind it? Why this, this condition is there? You can say kind of a specific criteria or specific condition. Condition for principal auditor. Okay, I'll explain you with an example why this condition is there, and we will understand with this particular example. Okay, let's say there is a company, like these companies are there. I'm providing you the financial information of these companies. So I have XYZ Holding, I have ABC Limited, DEF Limited, and ABC Holding, and consolidated. ABC Holding consolidated. I'm not going to A and B individually. First, I will report their turnovers. So the turnover of XYZ Holding, this is standalone, not consolidated. The turnover of XYZ Holding is, you can say, 10 CR. ABC Limited turnover is 1200 CR. DEF Limited turnover is 5 CR. ABC Holding consolidated. Okay, I'll remove this particular part over here. I'll write it here, consolidated. Turnover is, let's say, 4 CR. Okay. This is the individual turnover. Now, when I say that, okay, the auditor of XYZ Limited, XYZ Holding, that is Mr. K, will use the work performed by Miss J, Miss I, and Mr. O. Who is performing major work over here? When you prepare a consolidated financial statement, consol FS, who is performing major testing? Simple. Who is performing major testing?
Based on turnover, Miss J.
When I will prepare a consolidated financial statement, majority of the numbers will be from the ABC Limited. which are already audited by Miss J? Yes or no? So Miss J she has already audited majority of the numbers. Now, if something is being already audited and I'm just using it, can I call myself as a principal auditor?
No.
I am just using the work of another auditor, but that auditor has already done majority of the work. So if you go to the definition of the principal auditor, it says that financial information of the entity, when that financial information includes financial information of one or more components. Now here, this particular term includes, okay, that means you have to understand some portion. It includes some portion, means rest of the financial information pertains to this entity itself. So rest of the financial information of this entity only. So some portion is of component, majority portion is of the entity. At that point in time, I can call that person who is doing the audit of entity as a principal auditor. But here in this example, I cannot say this includes. This is everything. Like majority of the portion is of the ABC Limited. It is beyond including. That's why the standard puts some criteria that, okay, do not just based on the arrangement call yourself as a principal auditor. Understand whether you are actually the principal auditor or not based on certain criteria. So here this exception will be applicable. You need to evaluate the specific condition. What is this specific condition? So before accepting as a principal auditor, you as a statutory auditor of the parent company need to understand whether your own participation is sufficient to be able to act as a principal auditor. That means, are you alone, like can call yourself as a principal auditor? And for that, what you need to understand is materiality of the portion of the financial information which you are auditing, which the principal auditor is auditing. Principal auditor's degree of knowledge regarding the business. For example, here, ABC is the manufacturing entity. DEF is service. This is just holding company. Mr. K has no manufacturing audit experience. Can I call Mr. K as a principal auditor? Answer is no. He is not auditing material portion. He doesn't have any experience with respect to auditing of manufacturing, where the consolidated will have majority of the manufacturing numbers. Risk of material misstatement in the financial information which is audited by the component, which is audited by the other auditor of that component, and performance of the additional procedures. Now, when you will prepare a consolidated financial statement at this level or for this particular structure, what will happen is this consolidated financial statement will give you a consolidated materiality to be used for the consolidated financial statement. At that point in time, XYZ itself will become immaterial. The holding company will become immaterial. So whatever work performed for the holding, DEF, ABC holding is not material, because ABC itself is a very big chunk. So whatever work which is done by Miss J will directly become sufficient for Mr. K. Are you understanding the point over here? Any doubt with respect to this part? That before accepting as a principal auditor, consider these things. You need to consider the materiality that you are auditing, the portion, materiality of the portion that you are auditing, your knowledge, risk of material misstatement covered by other auditor, and the performance of additional procedures based on all these things. So if you understand all these things, then only say that okay, you can accept as a principal auditor. When you consider all these things, after that say okay, I can be a principal auditor or not. So materiality, principal auditor's degree of knowledge, the auditor's degree of knowledge, okay, uh, components, risk of material misstatement, okay, components, risk of material misstatement, and you can say additional procedures. So kind of MACA is something that you need to evaluate first before accepting as a principal auditor. So before accepting as a principal auditor, before becoming PA, check MACA. That is the kind of term you can easily remember. Okay. Clear with this?
So Miss J would be the principal auditor in this case.
No, it would, Miss J would be the principal auditor, but it will be inappropriate for Mr. K to accept as a principal auditor. The question is whether Mr. K should accept as a principal auditor. And answer will be, it will be inappropriate for Mr. K to accept as a principal auditor.
Okay.
Any doubts? No? Okay. Now we have established, let's say for a hypothetical example, we established that Miss J, she is the principal auditor. Now what? Or let's say for example, forget everything. Let's make Mr. K as a principal auditor. But then what? If we make anyone as a principal auditor, what will happen? Then comes the responsibility of the principal auditor. So when I talk about responsibility of the principal auditor, there are two things. One with respect to the planning part, one with respect to the execution part. Okay. So once I call someone as a principal auditor, I need to define what are their responsibilities with respect to the planning of the audit, what are their responsibilities with respect to the performance of the audit. Okay. That is the main important thing that we need to understand. Okay. Now, when I talk about principal auditor's responsibility, or when I say that this person is a principal auditor, can, let's say for example in this scenario, let's say I for time being consider Mr. K as a principal auditor. Time being, okay, let's assume he has knowledge, he is doing most audit, everything. As of now, I will just remove the numbers. Forget these numbers. For time being, let's understand, think that he is a principal auditor, Mr. K. Can Mr. K rely upon the work performed by JIO? Simple question, no complications. Can Mr. K accept the opinion issued by JIO?
Yes.
Okay. Now I will change something a bit. ABC Limited, this was Indian entity. This is Indian. This is Indian. This is ABC Holding. Let's say the full name of this company is PTE Limited of Singapore. Mr. K, he is the CA, CA, CA. He is a Singapore CPA. Now tell me, can Mr. K directly rely upon the work performed by JIO? Can Mr. K rely upon the work performed by JIO? Okay, Geet, good. Good, Lavanya. Good, Mega. Anyone? Yes, good. So most of you answered that for the Singapore one, he cannot. For the rest, JNI, he cannot. He can. Okay, accepted. For the JNI, he can. For the Singapore one, he cannot. So to use the work of Singapore, Mr. O, CPAO, what he should do? The question is, what Mr. K should do to rely on work performed by Mr. O? Simple question. What he should do then? Keep yourself in this example and tell me, let's say Mr. O has audited the ABC Holding Pte Limited financial statement. He has issued unmodified opinion. Can you directly use this unmodified opinion and the numbers in your consolidated financial statement? If not, then what you need to do to incorporate those numbers in your consolidated financial statement? Anyone? Okay, very good, Lavanya. Anyone like with this, what you should do? Okay, I will provide you some more information. So Mr. K, for the standalone financial statement, he issued unmodified opinion. Here, ABC Limited, again, same unmodified opinion. For DEF Limited, it was qualified opinion. Let's assume something was not appropriate, they issued qualified opinion. For this, limited review was performed. Limited review opinion. Now tell me, can you directly use the financial statement which are audited by Mr. O for the consolidation purpose? Okay, Mega, good. I will take your like this the answer that you are given, Mega. Will change a little. It will change a bit. I will take it this example. In this particular case, when Mr. O has issued a limited review opinion, can you use directly the financial statement? Yes or no? Very good, Geet. So you cannot, simply cannot, because this is a limited review that is being performed. Limited review will have limited audit procedures. You need reasonable assurance, because on consolidated financial statement, you will be issuing reasonable assurance. I cannot use limited audit procedures to issue reasonable assurance. What I will do, I will ask him to perform some additional procedure. Okay. Or I myself will perform some additional procedures. Or I may appoint someone else, or I may ask someone else to perform additional procedures. There are three options. Either Mr. O has to perform additional procedure, either Mr. K has to perform additional procedures, or either Mr. K or the management or anyone will appoint additional person to perform additional procedures. But additional procedures are required to be performed. I directly cannot use the opinion or the financial statement based on the limited review opinion. Okay. So when I talk about the responsibility of the principal auditor, the first responsibility comes with respect to, can we rely upon the work performed by another auditor? That means, is it fine to use directly the work of another auditor? Is it fine? Can I directly rely upon the work performed by another auditor? In this particular scenario, it is not. The first responsibility of principal auditor is to understand the professional competency of the another auditor, unless he is a CA of ICAI. Okay. So consider the professional competency of another auditor other than, okay, if other auditor is not a member of institute. If he is not the member of institute, then evaluate the professional competency of the other auditor. For example, here, who is this person, Mr. O? If Mr. O is not a chartered accountant or member of ICAI, is he a member of any professional body? Like here in this scenario, he's a CPA. So is he a member of a similar institute which is there in the Singapore? When you understand the competency, yes, he's competent enough because he's a CPA of some Singapore institute. Fine, good. Now, how the procedures performed, okay, by them is adequate for me. I need to understand whether the work performed by the other auditor is adequate for the purpose of principal auditor. Means here he has performed limited review. This work, the first question will come is whether this limited review is adequate for the principal auditor, Mr. K. Understand that these are the two things you need to understand in the planning stage: competency and the adequacy. Competency of the other auditor if he is not a member of institute, adequacy of the work performed by, even let's say DEF Limited, he is a CA, but instead of qualified opinion, you have only limited review. So irrespective they are the member of institute or not, you need to consider the adequacy of the work performed by them. See, competency if he is not a member of institute, adequacy irrespective of the position, like whether they are the member of institute or not, irrespective of the position, I have to go and check whether their work is sufficient for me or not. Clear? Okay. Now, when I am using the work of another auditor, okay, now what I need to do is, first of all, I need to say to the other auditor that I am going to use your work for this particular purpose. And well in advance, I'm telling you that I will be using your work. It should not be a surprise for Mr. O or Miss I or Miss J that, okay, your work is going to be used by me. I should not go at the last moment of the end of the audit, give me your work, I'm going to use it for my audit. No. you have to tell them in the start, advise them in the start. Okay, I'm going to use your work. You need to do the work in this particular way so that I can use it. Okay. When I advise them, I provide them a document. Okay. I provide them a document. Usually this document is known as a instructions, group instructions or group audit instructions, group audit memo. A lot of different terms are there. Okay. Where the principal auditor issues the instructions that, okay, this is how your work is going to be issued by the, me, like the principal auditor. And based on that instructions, the component auditor performs the necessary work. Clear? Any doubt? Any doubt till now? Okay. Okay. Now, if no doubt, so we have understood now the competency, adequacy, and the instructions. Okay. So we'll go. Once we identify the competency, if not CA, if once we understand the adequacy, then on the basis of that, we need to advise the other auditor that their work is going to be used and make sufficient arrangement for the coordination of their efforts at the planning stage. Okay. Like, for example, areas requiring special consideration, procedures for identification of intercomponent transaction, group elimination, basically related party elimination, so all these things. And like significant areas and all these things. So I call them, or you can say these are the instructions by principal auditor. I will show you an example which is there, which is, kind of a summary, like, some portions of the instructions which are issued by the principal auditor to the component auditor. So you can say these are some this is an example document that I'm going to show you, which is issued by a component auditor to the principal auditor with respect to how their work is going to be used. Again, this document is on overall level, but in actual, these documents are prepared at a very detailed level. So just a minute. Okay. So see, this is just on the letterhead of the group auditor. Okay. They issued the group audit instructions for the audit of a particular, subsidiary company. This is the subsidiary company, one particular, okay, subsidiary of parent company. Work, like, okay, you have to conduct audit in accordance with the international auditing standard or something similar. I may also say that standards on auditing issued by ICAI. Okay. And you need to consider with respect to the group accounting policies. In our case, it can be based on the Ind AS or IFRS in this particular example. Okay. So scope of work means you perform this work based on these particular standards on this particular accounting principles and accounting policies that are required to be followed. Materiality, we will give them the materiality. What is the materiality? Component materiality. These are the component materiality. That means they are required to consider this materiality for the purpose of reporting to principal auditor. If anything beyond this component materiality, component performance materiality, any misstatement beyond this, that is a material misstatement for us. Or threshold for trivial matters. Like if any matter which is of this particular number or below this, don't involve. Do not need to be accumulated or reported to us. Unless it's a fraud or qualitative significant. Otherwise, do not report to us, please. These are the trivial matters. Then significant risk of material misstatement, we provide them for the group purpose. What are the significant risk of material misstatement? For example, multi-element service contracts in 2025, impairment of the manufacturing plant, inventory valuation. These are the critical areas for us as a group and its environment. So by default component for you, these areas are going to be the significant risk areas. Irrespective of your individual assessment, you need to consider that as a significant risk. So for the purpose of our audit, so that I can use your work, consider that as a significant risk. What will happen once they will consider this as a significant risk? What will happen once they consider this as a significant risk? Come on, guys. What will happen when they will consider this as a significant risk? If the component considered this as a significant risk, what will happen? Further audit procedures. Yes, very good, Geet. If I consider this as a significant risk area, that will make this as a high risk area. I need to perform more audit procedures. So let's say originally I thought, okay, impairment of manufacturing plants is not a high risk area. So I was not going to perform the audit procedures. Fine, I was not going to perform any, higher audit procedures. So I would have performed normal audit procedures as a component auditor. I would have issued opinion based on the normal audit procedure. Was that adequate for the purpose of principal auditor? Answer is no. Then in that case, that would have not become adequate for the purpose of principal auditor. Hence, now principal auditor made clear, this is something you need to do in this way. You need to consider this particular part, you need to consider these areas as a significant area so that I can use your work. Otherwise, I will not be able to use your opinion even if it is based on the reasonable opinion. Clear? Are you understanding why the risk is provided? Then you have specific areas or focus of areas that the component auditor should have: related party transactions, contingent liability, subsequent events, group consolidation, communication, how you need to communicate with the principal auditor. You need to provide signed auditor report, completed audited group reporting pack. So these are some documents which are provided. A detailed management letter outlining any internal control deficiencies, a summary of all corrected and uncorrected audit differences, a written representation confirming your compliance with our instructions. Then you have the due dates. And ethical and independence requirement. This is very important because you might have a different ethical and independence requirement. So you need to make sure that your component auditor are also ethically complied and they are independent. So please confirm in writing that your firm, all individuals on the engagement have been independent of parent company and all its components. And you can have the code of ethics issued by ICAI over here. Access to the information. Whatever information is required, you need to provide that information by this particular date or something based on this timeline. Okay, so this is how instructions are provided. Any doubt to this? So once these instructions are provided, we have seen, like, requiring special considerations, procedures for identification of intercomponent transactions, disclosures, timetable for completion of audit. All these things are there in the instructions that are provided. Significant accounting and auditing and reporting requirements, obtain representations to comply with them. We saw these all examples now. Clear? Any doubt till now with respect to the instructions? Any doubt? There is one question. Suppose one of the auditor gives a modified opinion, what will be its effect on the principal auditor's opinion? So, Megha, in that particular case, you need to understand what is the materiality. So, for example, we'll go to the instruction ones to discuss this point. Now, here we had this materiality. This is the component materiality. So, we need to understand the modified opinion you provided. You can have a different materiality. Now, this component materiality is calculated on consolidated FS numbers. Consolidated FS numbers. But your individual materiality that you have used for the standalone audit could be lesser than this. So first of all, you need to understand, is it still material misstatement for the purpose of reporting to the principal auditor? If yes, then principal auditor will consider that based on this materiality and will see in front of the group materiality, or you can say consolidated materiality, what are the, whether it is a material misstatement or not, and accordingly he will, issue an opinion. So how it happens, basically, when I talk about, just I'll give you a brief on the materiality part. What happens is, let's say we have console materiality, let's say of 2 CR. This 2 CR materiality is broken down in component materialities. And this is provided to each component. And this is done on based on some, ratios or how much critical that component is. This component materialities are then broken down further. Like, okay, it has overall materiality, performance materiality. So when this, if it is material at the component level, when he will receive the component, the principal auditor will receive, he will check again this console materiality. It was material based on performance materiality, but is it material based on consolidated materiality? If still yes, then qualified opinion or adverse opinion. Clear? Okay. Once you provide them the instructions, then in that you may also ask them the information throughout the audit. It is not something that you need to do at the start. No, it can be throughout the audit. So you then go and ask them, okay, throughout the audit, what are the things that you need from them? What are the things that they should do? Okay. Then you ask them, okay, fine. Like, okay, you have done these things. Give me all these additional things. Okay, you have performed these additional procedures. Now perform more procedures. Okay. So what you will do is you will ask them the information, that a review of written summary of the other auditor's procedures, finding which may be in the form of a completed questionnaire or checklist. Different things can be there. So you may ask other auditor to provide these things. You may also wish to visit other auditor. So either you may go for questionnaire, or you may visit, okay, or you may perform additional procedures. as a principal auditor. So that is up to you. Then as a principal auditor, whatever you think, okay, it is necessary, you do that. You will perform additional procedures depending upon the circumstances, depending upon the scenarios, whether he has performed limited review or whatever it is. Okay. You may ask him, sometimes see what happens in practical scenario. In this scenario, let's say the CPA says, no, I'm going to issue a limited review. My scope doesn't allow me to perform reasonable assurance audit. It is not within my engagement, and management is not allowing me to perform reasonable audit. So you provided the instruction, but the CPA denied, I cannot perform. What you will do? What you will do at that particular point in time?
Provide that in the auditor's report, mention there.
So can you say, okay, he is not performing, so I am not issuing an opinion on that particular part?
No, not that. About what opinion he has given.
Basically, let's say he has given a limited review opinion, everything is fine. Okay. Then what you will do? Like, he is not ready to perform a reasonable assurance based audit. Very good, Mega. Very good, Geet. So at that point in time, I may go and perform myself additional procedures, because at the end, it is my responsibility to issue opinion on the consolidated financial statement. Yes or no?
Yes.
So I
Yes.
will go and I will perform some additional procedures at my end, because he is not ready to perform or he cannot perform because of the given circumstances. So either questionnaire, visit, or additional procedures can be there based on the scenario. And then you need to consider the significant findings of the other auditor based on the materiality that you have given to them. If they provide you any significant findings, consider, evaluate them, whether it is still material for the purpose of consolidated opinion. If yes, then accordingly issue an opinion, accordingly issue a modified opinion. Any doubt to this? Any doubt? Okay. Now, see, this is we discussed two type of things. One with respect to the planning, let them know how their work is going to be used, competency, instructions, adequacy. Second is execution, questionnaire, checklist, additional procedures. Now we will be discussing one important part, that is the reporting part. We will see reporting now. I will again take you back to the annual report, and we will see what impact this using the work of another auditor has on the annual report. So we will go to the consolidated opinion. This is basically standalone. This is standalone. I need to go to the consolidated. Wait. Yeah. This is the report on the consolidated auditors, consolidated financial statement. Do not focus on the name of the company. It's a publicly available data. Okay. This is the opinion on the consolidated financial statement. I am going to discuss one specific point over here. I'll not go through the entire report, but specific area. See over here, if I talk about here, if you see what key, this is the key audit matters. Now, key audit matters of the step down subsidiary of the parent have been reported over here. Means you are considering, this is the considering work of another auditor. You are going through his report and identifying which are the key audit matters, which were key for the subsidiary also, now key for the parent also. Again, we will see more of this in SA 701. Okay. Again, a lot of things are over here where you specify what is the requirement, but I will take you to a specific area. Yes, this other matter paragraph. We will read this other matter paragraph for better understanding. The consolidated financial statement includes financial statement, financial information of 217 subsidiaries whose audited standalone consolidated financial statements, financial information reflect total assets of this CR at 31st March this, total revenue this, net cash outflow this for the year ended on that particular date. The consolidated financial statement also include group shares of net profit of this CR for the ended this as considered in the consolidated financial statement in respect of 12 associates, 10 joint ventures. This is very important point now. These financial statements information have been audited by one of us either individually or jointly with the other auditors. Are audited by other auditors, joined by them or by other auditors. Okay. Again, so we will see some more, paragraph on this, that we did not audit financial statements information of 128 subsidiaries whose standalone consolidated financial information reflect this assets, total revenue this, net cash this as on date. Okay, the group share includes of joint venture this, which are not audited by us. Now, very important point. These financial statement, financial information have been audited by other auditors whose report have been furnished to us by the management, and our opinion on the consolidated financial statement insofar relates to the amount and disclosure included in the respect of these subsidiaries, joint venture, associates, okay, is based, after that, is based solely on the reports of the other auditor. Very important point. That is, you are reporting where you have used the work of another auditor. This is nothing but referencing work of another auditor. And under which para you are doing? Other matter paragraph. You are providing in the other matter paragraph, okay, what is the amount of the information which is audited by another auditor and how you have dealt with it. Okay, how you have dealt with that. So you need to report that in the other matter paragraph. Same, it's a requirement of the standard. Standard says that when you are basing your opinion upon the reports of other auditor, okay, reports of other auditor, then you should clearly state the division of the responsibility for the financial information of the entity, indicating to what extent the financial information of components audited by other auditors have been included in the financial information of the entity. Means you need to demonstrate, you need to provide that information. What is the amount which is audited by other auditor and on which you have relied upon? So you are providing, see over here, 128 subsidiaries, total asset of this much CR, total revenue of this amount, net cash inflow of this much crore. You are providing that. Okay, this is the amount, this is the financial information, extent to which financial information of the components audited by other auditor. This is the extent you are providing, which is included in the financial information of the entity. And this is done in the other matter paragraph. We will see about more on the other matter paragraph when we will go and see SA 706. Okay. Other matter paragraph we will understand in much more detail when we'll go and understand SA 706. Clear? Any doubt with respect to this whole standard, which is with respect to using the work of another auditor? Okay, we will go to the study material and we will quickly go through about this particular standard in the study material. See, here we have on page number 3.18, SA 600, using the work of another auditor. Okay, again, provided when auditor delegate works to assistant use or uses work performed by other auditors, experts, he will be continued to be responsible for the forming opinion or expression on the financial statement. The way we understood, see here, as I already discussed, other auditor does not issue opinion on the FS of entity. No, it is the principal auditor who issues the opinion. Just he is using the work. So here the prime responsibility lies with the principal auditor, not the other auditor, because he is not issuing the opinion on the parent entity's financial statement or consolidated financial statement. Here, the other auditor is only issuing an opinion on the component financial statement. So the responsibility lies with the parent entity auditor. In our example, Mr. K is the one who is issuing opinion on the consolidated financial statement. Miss J and I are not issuing opinion on the consolidated financial statement. So they will not be responsible for the consolidated opinion. Only Mr. K will be responsible for the consolidated opinion. Okay. Again, SA 600 does not deal with those instances where two or more auditors are appointed as a joint auditor. We discussed joint auditor out of the purview of SA 600 because that is SA 299. Then the terms principal auditor, other auditor, component, we understood. We understood this when principal auditor uses the work of another auditor. Principal auditor has to determine how the work of other auditor will affect the audit. So adequacy, instructions, all these points will be discussed. Now acceptance. Remember specific condition. Don't go on the arrangement. You need to think of the few things, specific condition before accepting as the principal auditor. Materiality, degree of knowledge, risk of material misstatement, additional procedures. Remember, to be a PA, verify MACA, that is materiality. Auditors, another auditor's degree of knowledge, risk of material misstatement for the component risk of material misstatement, and additional procedures. Then right of principal auditor to visit and examine the books, principal auditor to consider the competency. We saw if they are not a member, then they need to consider the competency. Procedures to be performed by principal auditor. Okay. For example, advice. These are the instructions that we saw. then you need to inform them in advance the special areas, intercompany transactions, timetable for completion of audit. All these things we have already seen in the instruction as an example. Okay. Then you may review written summary. You may ask them, okay, what you have performed. We discussed this particular area. Significant findings based on the component materiality. If he is not a professionally qualified auditor, you will consider the competency. Okay. Documentation in his working papers, coordination. We have discussed all this, that by way of instructions, you need to coordinate with them. You need to provide them all the details, how you need to report back to us, what are the things, what you need to bring to our attention based on the materiality and all that stuff, and reporting. So if other auditor issues modified opinion, you need to think whether it is relevant for you, whether that modification requires a modification in your report based on the materiality. So you will consider their modifications. We saw key audit matter, which is considered key audit matter of the component auditor considered in the principle. You need to understand whether that is relevant for you or not. Division of responsibility and reporting part. Okay. So that is your SA 600 with respect to in the study material. This is the reporting in other matter paragraph. Any doubt with respect to SA 600? Okay, there is one question. In this example given by you, suppose if Miss J is the principal auditor, how she will report on the whole FS as she is the auditing only one component, though it constitutes substantial amount of group, as others will be related parties except XYZ holding, which is its holding. See, practically what happens is the auditor who audits material portion is the principal auditor and the group auditor. So in this particular example, let's say ABC was having 1200 crores. Miss J was the auditor who was auditing majority of the portion. Now, basically, here what will happen is ABC will say, make Miss J as the auditor of the XYZ holding also, and make her as the principal auditor. Because she is already auditing majority of the portion, let her issue the consolidated opinion and the opinion on the XYZ holding also. Usually, practical scenario, I'll tell you, they will not appoint Mr. K. They will appoint Ms. J. Because she is already auditing majority of the portion. And they will say that, okay, you are already auditing majority of the portion. You audit XYZ holding also. Clear? Any doubt? Any doubt in this whole standard that whatever we have discussed? Yes, no. Okay. If no doubts, let's take a question. Okay, let's see some questions on this from the study material itself, so that you guys have a clear understanding of the topic. So I'll go to the question section in the study material, and they have a very good questions in the study material. I would recommend everyone to solve these questions. These are very important. And then we will see, okay, with respect to the questions, like, okay, what to be done and how. Okay. So we will see this question. Very, very simple question, nothing difficult here, but it's a very good question. KRP Limited at its annual general meeting appointed Mr. X, Y, Z as a joint auditors to conduct the audit of financial statement 23-24. Okay. Now, for the valuation of gratuity scheme of the company, Mr. X, Y, and Z wanted to refer to their own actuaries. Due to the difference of opinion, all the joint auditors consulted their respective actuaries. Subsequently, major difference was identified. Major difference was identified in the actuaries report. However, Mr. X agreed to the Mr. Y's actuary report, though Mr. Z did not. And Mr. X contended that Mr. Y's actuary report shall be considered in the audit report due to majority of the votes. Now, Mr. Z in this dilemma explained the responsibility of auditor in the case report by Mr. Y's actuary later was found faulty. Okay, this is something related to, we have already seen SA 299. This is something related to, already we have discussed SA 299. Okay, here there are three auditors X, Y, Z. They had doubt with respect to the gratuity valuation. They appointed their own actuaries. X and Y has a common, acceptance. So Mr. X agreed to Y's actuary report. So X and Y agreed to same actuary, same report. Z is not accepting. Z is, is in dilemma. He is not accepting X and Y's actuary report. What Mr. Z should do? What Mr. Z should do in this particular scenario?
Mr. Z can take his actuary in his audit report.
Okay. Yes, very good, Geet. What Mr. X should do, or Z should do? Very good, Megha. Very good, Chitra. Yes, absolutely correct. So Mr. Z will issue a separate audit report and Mr. X and Y will issue a common audit report. Common audit report will refer to a separate audit report and separate audit report will refer to the common audit report. Now, we will go to the second number question. Explain the responsibility of the auditor in case report made by Y's actuary later was found faulty. Who is responsible in this scenario?
It would be Y's responsibility in this case, because he is responsible for his actuary report.
Okay. Anyone else? Very good, Geet. Will all the auditors not be jointly and severally responsible or liable? Don't you think all these auditors will be jointly and severally liable for their respective areas or for this particular area? Yes or no? Can I say they are jointly and severally liable for these jointly and severally liable for this gratuity area? Very good, Geet. Very good, Megha. Very good. Yes. See, for the matters where all the joint auditors have agreed upon, they will be liable jointly and severally. And they will be liable for the financial reporting framework, for the disclosure of the financial statement. Here, it is the valuation of gratuity scheme. Mr. Z is not agreeing to the report of Mr. Y's actuary, which is agreed by X and Y. So here, X and Y will be responsible, not Z. So Mr. Z will not be responsible for the faulty report of Mr. Y's actuary. Okay, because this is not the area where the auditors, joint auditor will be jointly or severally responsible. Clear? Any doubt to this answer? Okay. If no, then let's take one more question. This is basically a like kind of a case study question, but we will take the question number one for this. Okay, and we will solve these later on rest of the questions. Okay, this is a case study. First, we will discuss the case study and then we will go to the next questions. The case study is Super Products Limited. A listed entity invested 500 crores on 1/4/2022 in Tricycle Technologies Limited and acquired 35% equity through superior voting rights, equity shares, and the right to appoint majority of the board directors, including nominee director. Under the investment agreement, this Tricycle Limited TTL agreed to pay 30.5 crore every year plus 65% of the dividend declared each year. Okay, to Super Products Limited. Now, TTL agreed that the Super Product Limited would take all the decisions about manufacturing, marketing, and selling of the new and existing products, either already developed or developed through patent and technology provided by the Super Products Limited. SPL appointed Sudha and Associates as their statutory auditor for the financial year 22-23. Tricycle Technologies Limited appointed Shubham and Company their statutory auditors. Sudha and Associate issued a guidance to the Shubham and Company on how they will use the work that they will be performed. Okay, that will be performed by them. However, TTL management was of the view that they are not required to share anything with Sudha and Associates. Also, TTL is a separate standalone entity where majority of the holding is with the old individual shareholders. And hence Shubham and Company is not required to share or disclose any information to Sudha and Associates. Okay, so the first question is, as a parent auditor, Sudha and Associate decided to visit TTL to examine certain key transactions pertaining to the deal between SPL and TTL. However, TTL management decided and explained to Sudha and Associate that they are not the principal auditor. Kindly guide TTL with respect to the Sudha and Associate being principal auditor. We will not go to the option, just we'll see. Now tell me, first of all, the first question, whether Sudha and Associates are principal auditor or not. Read the question, understand the questions once again, and then try to answer. Take a minute, read the question, and tell me whether Sudha and Associate are the principal auditor or not. Okay, so I hope you have gone through the question. So tell me, do you think Sudha and Associates are principal auditor?
Yes, they
If
can be
yes, then
considered.
on what basis? Yeah.
They can be considered the principal auditors on the basis that they have invested 500 crores and acquired 35% equity. And that seems to be substantial to me. And hence they are the principal auditors.
Okay. So you are saying the amount is substantial. That's why they are principal auditors.
Yes, I think, yes.
Okay. Very good, Geet. Very good. Very good, Mega. Very good, Chitra. Yes. See, as per India's, there is a definition for the control. Okay. If you see the India's, there is a definition for the control. It is not on the basis of the equity. It is based on the various things. Your participation in the dividend or the profits, your decision making, you decide the manufacturing, marketing, selling, appointing majority of the directors on the board. That shows that you have a control on that particular entity. Once you determine the control on that particular entity, then you are required to consolidate that particular entity when you are preparing the consolidated financial statement. Okay. So if I go only equity, it may become associated entity or enterprise. But here it is not an associate. It is the subsidiary because you have a right to appoint majority of the board of directors. You have the right to the majority of the dividend, participation in the profits. You can take all decisions about manufacturing, marketing, and selling of new or existing products. That means this demonstrates you have a control. Based on control, consolidation is required. Okay. Now, based on consolidation, if consolidation is required, this will become parent entity, and they are eligible to be a principal auditor. So Sudha and Associate will become principal auditor. Now, in this question, if you see, TTL was saying that no, you cannot visit. So, as in parent auditor, Sudha and Associate decided to visit TTL. Now, the next question is, can they visit or not? They decided to visit TTL to examine certain key transactions. Can they visit or not? They are parent auditor. We understood. Fine.
Yes, they can visit, but if they are not allowed to visit, then that would be a limitation on the scope of the audit in that case.
Absolutely correct. They are entitled to visit. If we go back to SS 600, okay, over there, they have a right to visit. The principal auditor may also wish to visit the other auditor. It is their right to visit. Component cannot say that, or component auditor cannot say that you have no right to visit. Sorry, there is a right which is given in the standard itself. You can visit. If you will not allow the visit, then it will be a limitation on the scope of the audit. Okay. So you may visit based on your professional judgment. If you decide to visit, then no one can stop you. If they are stopping you, it will become limitation on the scope of audit. As a result, TTL Limited, TTL cannot deny Sudha and Associate from visiting the premises or visiting the TTL to examine certain key transactions. Clear? Okay. The second question. Kindly explain Sudha and Associates the matter to consider before whether their own participation is sufficient to be able to act as a principal auditor. What are the matters they need to consider before deciding whether they can act as a principal auditor or not? Matters.
MACA.
Okay. Can you also provide the details of that?
Yeah, materiality, auditor's degree of knowledge, components risk of material misstatement, and additional procedures.
Absolutely correct. So MACA is something that they need to consider: materiality, auditor's degree of knowledge, okay, materiality of the portion of the financial statement which principal auditor audits, principal auditor's degree of knowledge regarding the business, so auditor's degree of knowledge, components risk of material misstatement, and additional procedures that are required to be performed by principal auditor or required to be performed by component in respect of the principal auditor. So other procedures, okay, that the component auditor should perform with respect to the principal auditor. So based on these things, you need to decide whether their participation as a principal auditor is sufficient or not. Okay. So to decide PA, think of MACA. Clear? Any doubt to this? Okay. If no doubts, then what you need to do as a next? See, I want you guys to go through the rest of the chapter. Okay. Have a reading of whatever we have discussed and whatever is next in the chapter itself. For example, in the next session, we are going to discuss about SA 610 using the work of internal auditors. Then, apart from that, we are going to discuss about using the work of internal audit function. Okay. Then we are going to talk about SA 620 using the work of auditors expert. We will be talking about SA 540, which is very important in this area again. So, which is just a minute. Yeah, SA 540 accounting estimates. Okay, we will be discussing these standards with respect to special consideration on the planning and the execution. Okay, I want you to read these essays, this particular study material, on whatever we have discussed plus whatever we are about to discuss in the subsequent session. Be ready with respect to your queries. Okay, what you are like, if you don't understand any of the part, ask the questions, and based on that we will discuss further. Okay, so read the chapter, whatever we have discussed and what we are going to discuss in the subsequent session. And with respect to the subsequent sessions, I just want to highlight one important thing is we have a session on 10th September, which is Wednesday, for the chapter number 3. We have a session on 8th September, which is Monday. So Monday, Wednesday, and in the same week, we have a session on 13th September, which is Saturday. Okay, for the chapter number 4. So usually we used to have a session on Monday and Wednesday for the audit. Now we will have one more additional session for this week only on Saturday, which is 13th September. So please make a note of that. There is a session on 13th September, Saturday, of chapter number 4. Okay. So 8th, 10th, 13th are the sessions which are there in the next week, where we will be discussing chapter number 3 and the chapter number 4. Okay. And please read and solve the questions which are there. If no further doubts, I propose to keep the session till here. We will discuss rest of the standard in the next session. Okay. Thank you guys. Thank you for participating in today's session. I will see you in the next session.
Okay, thank you.
Thank you.
Good night.
Thank you, sir.
Thank you. Thank you.
Good night, Devogi.
Yes. Thank you. Good night.